Welcome back to a new episode of These Stocks Can Make You Rich. Today, we're going to be discussing the Bitcoin mining stocks. A lot of you guys have asked for updates on the Bitcoin mining companies. We've talked about these historically on this channel. And today, we're going to be exploring which are the top Bitcoin mining stocks, which ones should we avoid, which ones are holding Bitcoin, and which ones can make us rich. As you guys know, Bitcoin is the main game here, right? But there's a lot of proxies that you can invest in or potentially put some of your money to work and see massive gains. Some of that is MicroStrategy, some of that is Bitcoin ETFs or other Bitcoin and crypto related products. But a lot of people are not focusing on Bitcoin mining stocks, Bitcoin mining companies. And I think that this is a huge error. More than just the Bitcoin mining aspect of things is also the transition or integration of AI and HPC, which is high performance computing. As many of you know, basically AI, you need a lot of servers, a lot of bandwidth, and a lot of technology to process all of the data, and then basically come out with a response or an answer that the AI will give. And so a lot of these Bitcoin mining companies are starting to convert to the AI side of things because, number one, this is a revenue stream when the Bitcoin market is not doing that well. But it's also the same type of technology that and infrastructure that you need to run Bitcoin mining operation and an AI operation. So let's discuss it and let's understand, is Bitcoin mining over, or can these stocks make you actually rich? Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. We talk about everything in the macroeconomic environment, how to make money, how to invest, how to strategize, and hopefully exit this market in profits. And remember, nothing I say is financial advice. Do your own research. Let's get right into today's topic. So, dire picture for Bitcoin miners as revenue flatlines near record lows. Despite Bitcoin trading at $84,000, Bitcoin miner revenue has decreased due to the recent halving event and rising operational costs. And so, what does that mean for the Bitcoin mining ecosystem? What does that mean for Bitcoin? Well, hash price is a key metric used to gauge the Bitcoin miner revenue, and it's currently hovering near a 5-year low. Stark reminder of how difficult the mining business has become, right? Because keep in mind, with AI and Bitcoin mining, you have to constantly upgrade your equipment. You have to constantly get the next best thing because the technology is continuing to improve. And with Bitcoin, you start to see the difficulty increasing and the rewards get cut in half. This is why a lot of people are bullish from a price perspective. But let's kind of dive a little bit deeper into some of these Bitcoin mining companies and understand which are investable and which can make us rich. BitDeer secures a $60 million loan to boost Bitcoin ASIC production amid record hash rate. Now, BitDeer is a very interesting company because it is on the open market. It is a stock. Let's see if we can pull up the price chart of BitDeer. And we've talked about it pretty extensively on this channel. It's a Singapore, okay, here we go. BitDeer is Singapore-based, and from a price perspective, what you can see is it's been basically all over the place in the last year, but we went from $5 all the way up to $12, back down to $5, all the way up to $25, $26. So effectively, if you bought the low and sold the top, which most people don't do, but even if you bought the low at $5 and went all the way up to $25, it's a 5x. And obviously, we've retraced back down. This could be a potential great opportunity. Remember that Tether owns a large percentage of BitDeer Technologies. I think it's like 10 to 20% of BitDeer Tether actually owns. So that is also a very big positive for BitDeer. But we are seeing that, $60 million in the bull market. This is kind of similar to what we saw happen during the last bull market in 2021. Almost every single Bitcoin mining company was prepaying for their equipment to be upgraded the following year in 2022. And so in 2022, all these Bitcoin mining companies got all of this equipment delivered, paid for already. And electricity costs were much higher, so none of these went back online. And the equipment was already old, and the Bitcoin price was down. So they bought in the bull market, and in the bear market, they couldn't even use the equipment. And I warned about this. I said, this doesn't make sense why they're doing this in the bull market, buying this, and then in the bear market, they're going to be deploying it. Well, we have to keep our eye out on the same thing if this is going to happen this cycle. But BitDeer may also use some of this equipment to also not just mine Bitcoin, but also deal with the AI realm. Now, we're not going to be talking about too deep into the AI realm today. This is really more of an update video on Bitcoin mining stocks because you guys asked for it. But I want to show you guys some of the most undervalued stocks. Okay, now I metric the Bitcoin mining companies mostly on hash rate because the hash rate tells me how much they could like their capacity is, right, compared to the other Bitcoin mining companies. And so if we look at Cipher Mining CIFR, this is basically a $1 billion company. Okay, when I'm recording this video. Now, if we go back to last year, it was significantly higher, right? 3 times this, so it was $3 billion. But Cipher Mining has 13 and a half exahashes of operating capacity. Meanwhile, Hut 8 Mining, which by the way just made a partnership deal with the Trump family to create their own Bitcoin mining business. I think it's called American Bitcoin. Anyway, Hut 8 Mining just increased their hash rate to 9.3 exahashes per second. So remember, Hut 8 has 9.3, Cipher Mining has 13.5. So Cipher Mining basically has 50% more, maybe a little bit more than Hut 8 Mining. But Hut 8 Mining has a $1.2 billion market cap. Cipher Mining has a $1 billion market cap. How does that work? And then if we take it one step further and we look at Bitfarms, which is one of the companies I think is, if I'm looking at all of the Bitcoin and Bitcoin proxy kind of financial products, Bitcoin ETFs, MicroStrategy, Bitcoin mining companies, all of these different categories, I would say Bitfarms, in my view, is the most undervalued by far. Let's show you why. So Bitfarms now, when I'm recording this video, has about 20 exahashes per second under management, right? 19.5. This includes their newly acquired Stronghold Digital. Stronghold Digital was a separate company. They acquired them in an all-stock deal, I believe. Anyway, so they got 19 and a half exahashes per second. Take a guess at what Bitfarms' market cap is. And again, this is a Canadian dollar, so if we convert it to USD, that would be, where are we? Bitfarms 689 million. So that would be basically $500 million market cap. So Bitfarms has $500 million market cap, 500 million, and it has more hash rate than Hut 8 Mining, with more than double the market cap, and more than Cipher Mining, with double the market cap. Why are these two companies double the market cap, or more than double the market cap of Bitfarms, when Bitfarms is basically double their hash rate, their performance? That doesn't make sense to me. Now, if we also look at Bitcoin holdings, so these Bitcoin mining companies, this is how much Bitcoin they actually own. Hut 8 Mining owns 10,000 Bitcoin, so maybe that's part of the reason it has a higher valuation. And Bitfarms has 1,000 Bitcoin. So they both have Bitcoin, but Hut 8 has 10 times the Bitcoin that they have. I still think that Bitfarms is extremely undervalued based on all of the metrics that I have seen and based on all of the expansion that I have seen. We also have to look, when we're talking about high performance computing and AI, which companies have the power capacity. Because when we're talking about AI or high power compute, this takes up a lot of energy, the same way Bitcoin mining does. And so these Bitcoin mining companies, a lot of them have been acquiring properties that have already secured energy, energy rights, or are plugged into the massive grid, or Like in New York, there's a few Bitcoin mining operations where they're using hydroelectric power to power these plants. And so this has to be kind of taken into account as well. But when we're talking about AI, all of the servers, all of the bandwidth, all of the infrastructure, a lot of these companies are going to be outsourcing that to begin with. And so they're going to be looking for companies that have the infrastructure, have the facilities, and more importantly, have the power to make all of this operate. And so they are going to be looking at Bitcoin mining companies because I would imagine there's very few companies that are just doing AI compute infrastructure. They're probably doing multiple. That way they can have multiple streams of income. So if one stream of income like Bitcoin mining is not doing well because of where the Bitcoin price is or whatever other dynamics are at play, the AI compute can offset some of those losses that they would have otherwise not been able to offset. So yes, I do think that Bitfarms is still investable. I do think that Bitfarms is highly undervalued based on the metrics, just based on the exahash performance, based on the growth in the United States, based on the power accessibility. I believe that a lot of these Bitcoin mining companies are going to do well. We're not going to go into every single one of them because there are a lot. I mean, even if we just look at the Bitcoin treasuries map, I mean, Marathon Digital, they have almost 50,000 Bitcoin, right? And a very, multi-billion dollar market cap. Riot Platforms, 20,000 Bitcoin. And it's also important to keep in mind that Riot Platforms still owns about over 15% of Bitfarms stock. Now that may change. Maybe they've been offloading some of it. Then maybe that's why we've seen the accelerated losses in Bitfarms. I mean, just year to date, Bitfarms is down 35%. 1 year, it's down from the peak at around $3. We're down, 80% in less than a year. And so hopefully we can recover some of these losses. We know that Bitfarms is getting into high power compute and AI. They just hired a director named James Bond to run their AI compute. Of course, he's going to save the day and bring Bitfarms the valuation that they deserve. At least that's what I'm hoping. But anyway, so these are some winners, right? BitDeer getting more money to boost their operations. They're owned by Tether. They get a lot of backing from there. We did some comparisons between some of the big Bitcoin mining companies. We talked about the Bitcoin that they hold in their strategy. But there are also some non-winners in my book. One of those is Griffin Mining. Now, we've talked about Griffin Mining last year mostly, but they have underperformed factors beyond what I would have imagined, to be honest with you guys. The leadership team at Griffin Mining came from other Bitcoin mining companies that have grown and developed pretty massive operations. So that's what I was bullish on. But we have seen very poor execution over the last year from Griffin Mining. Some of this, by the way, some of this may just be because of the market dynamics. And the markets were all over the place with uncertainty until the election. Then we saw the Trump pump. But then we basically erased all the gains in most of these stocks and cryptos after that Trump pump, right? After that election excitement. You can see that right here on Bitfarms. Bitfarms dropped right before the election and then pumped right back up and then it's been coming down ever since. Cypher Mining, basically the same thing, right? Moved up into the Trump pump and then been coming down ever since. BitDeer. BitDeer was a little bit delayed. This could be due to the fact that BitDeer is not an American company. So they were worried that, and again, this is what I'm thinking why the market priced it in when it did. Like with Bitfarms and Cypher, the moves to the upside were mostly right before the Trump pump. But with BitDeer, it was after, or after the election, I should say. I think this is because once the election occurred, some of these companies that were not American or US based would have a little bit of an easier time. That's at least just my opinion on why the market priced it in this way. But again, went up into the Trump pump and then been coming down ever since. And so this could be a great opportunity if these Bitcoin mining companies are going to do well again in this cycle, if we're not in a bear market, which I don't know that we are in a bear market, but maybe we are. But Griffin Mining has underperformed, right? They haven't made any acquisitions. I've been very patient personally in my portfolio, with saying, okay, they're going to get it together, they're going to get it together. And then we got this. We got this in April. Where are we? April of 2025. Basically, they put this preliminary document to the SEC, Griffin Mining, basically saying that they're going to be calling a meeting of stockholders to approve and adopt an amendment to the company's certificate of incorporation to increase the total number of shares from 150 million shares to 500 million shares. So they want to increase the total number of shares by over 3x. I should say they don't want to increase it by 3x. They want to increase it by 2x, or over 2x, which would be basically a 3x from where we were. That's a lot. But not only do they want to do that, but they also want stockholders to approve and adopt an amendment to effect a reverse stock split. And basically at a specific ratio ranging from 1 share for 2 or 1 share for 40 at any time prior to the 1-year anniversary of the special meeting. So they want to, within 1 year, increase the total number of shares by 3x or 2x. And then they want to do a reverse stock split, which is basically if you have 1 share, they're going to give you 2 shares. Or if you have 1 share, they'll give you 40 shares. So that basically means they're going to increase the number of shares, and they're going to do a reverse stock split, which also increases the number of shares, which also then would effectively bring the price of the stock down, which I don't know why they would do. Typically, when you stock split, the price doubles, right? If you split it by half, the stock would double. This is a reverse stock split. So reverse stock split. Reverse stock split reduces the number of shares outstanding and increases the price per share proportionally. Oh, so I'm thinking about backwards. But yeah, basically, they want to reduce the number of shares because for them to stay on the NASDAQ, and they are on the NASDAQ, they need to be above, I think, $2. I think they get a warning when they're below $2, and when they go under $1, they have a certain amount of time to bring it back above $1. Otherwise, they get delisted. And so Griffin Mining wants to increase the number of shares and also reverse stock split to increase the price. If you hold $1,000 of Griffin Mining and they do a reverse stock split, you still hold $1,000 of Griffin Mining. But if you hold $1,000 of Griffin Mining and they increase the shares by 3x or 2x, technically the price of your stock would be dropped by 67%. So I don't know what they're trying to do here. Like, it doesn't make sense. There's reverse stock splitting, but they also want to increase the number of shares. I personally, I'm out. Like, I'm totally out of Griffin, taking loss on it. It is what it is. I don't know that they're going to be able to recover from this because, in my view, we have one more major pump in the bull cycle. And that's not just for crypto, that's also for crypto derivatives or crypto proxy stocks like Bitcoin mining companies. And so if they're not able to, in the bull market, raise money from other means, sorry about that, from other means besides just, besides diluting shareholders effectively, they're definitely not going to be able to do this in the bear market. And then that would mean that they're most likely going to get acquired by another company or go bankrupt and then get acquired by another company. And it's just a path that, honestly, I don't even want to see the stock in my portfolio anymore. I don't even want to talk about the stock anymore because I don't know that they're going to do well. And at 17 cents and a $12 million valuation in a bull market, when all of these other stocks, while yes, they have come down, they're not diluting. A lot of them are actually taking out debt to buy Bitcoin or not selling their Bitcoin. And we've heard from the Griffin Mining CEO previously that they look at the Bitcoin that they mine as capital, as working capital. They don't look at it as a whole thing, which I think is good for a smaller company to be thinking about. But with all of this expansion into AI and like it's underway right now. I don't know that Griffin is going. If it was just Bitcoin mining and we didn't have the AI category, Griffin I think would still be all right. But I think because we have the AI integrating with Bitcoin mining from an infrastructure standpoint, I think it's just going to be way too hard for Griffin mining to actually perform and become another TerraWolf or another Riot Platforms or another Marathon Digital. I think it's going to be almost impossible, at least at this point, from an investability standpoint. Obviously, I wish them the best, but I don't know if this is investable, right? For you, it may be investable because 17 cents, even if they reverse stock split and add shares, maybe it's still going to go much, much higher. But I just think that there's better options out here in the market. And some of you are going to say, Cryptoviser, you're selling the bottom of the market for Griffin mining. Here's the deal. I don't think that's the bottom, right? I don't think that's the bottom. Because when you see companies doing this, it's almost like last ditch effort, right? It's the same kind of thing that we're seeing with GameStop buying Bitcoin and the Bitcoin maximalist cheering this on. And it's like, this is not actually good because GameStop is buying Bitcoin as a last ditch effort because their business is a failure. And not necessarily due to any of their, oh, I mean, it's just times have changed, right? You can just buy a game online now. You don't need to go to a store. And so GameStop's business model is a failure. So they're going to Bitcoin as a last ditch effort. That's not a good sign for Bitcoin or for GameStop. Because if GameStop goes bankrupt, what do you think the first thing they're going to do? They're not the bankrupt attorneys are not going to say, let's hold this Bitcoin and we're going to get even more rich. No, they're going to say, liquidate it now. We need the money now. And they're going to liquidate all that Bitcoin. And this could be a catalyst that drives the price of Bitcoin much lower or brings us into a bear market if GameStop doesn't make it. And again, that's just a theory that I have on why they're doing what they're doing. But when we're talking about taking out money in a bull market, they should be doing this in a bear market, right? Not in a bull market. And I understand they want to probably capitalize on a potential pump in the markets. They can increase the shares then by selling shares on the market. This is the same thing that MicroStrategy is doing. They're selling their own shares on the market when the price is at a premium to then go buy more Bitcoin. But we don't know what they're going to be doing with all this money that they're raising, or are they just doing this to dilute the shares or to bring it back in compliance with the NASDAQ? Either way, honestly, it is what it is. I have other Bitcoin mining companies in my portfolio that I think are going to perform much better. And so we're not going to win them all. That's part of investing. One of the big things with the investing world is people don't want to take a loss. Even if they're down 90%, they don't want to realize that loss. And sometimes it's better just to remove it from your portfolio, reinvest that money, even if it's just 10% of what your original investment is, and to put it in an asset or another stock that you feel better about, that you think is going to perform better, and that you're going to probably, hopefully, see gains in, right? But yeah, for now, Griffin mining is not it. I'm really going to be focusing on these Bitcoin mining companies that I believe are more undervalued, like the Bit Farms of the world, the Bit Deers of the world, even TerraWolf. If you look at TerraWolf, it's basically come down back to its multi-year lows that we've seen, multiple years ago, $2, and we're back in the $2 range, and it was all the way up to $9 earlier in the year. And again, TerraWolf, only $1 billion market cap, pretty good operation, pretty good exahash rate, pretty good executive team. I mean, there is so much opportunity to make money in these markets that I believe that many of these Bitcoin mining stocks are going to make people extremely rich, whether they're buying spot, whether they're buying options or other derivative products on these stocks. But I do warn, as high as we can go in these stocks, just remember that all of the gains that we have seen have been basically wiped out. Everything in the last year that we've gained has been wiped out, at least in TerraWolf, at least in Bitfarms. Let's pull up Hut 8. Hut 8, basically almost there, right? It was at $8, $9. Now we're at $11. Some of that can be maybe based on their acquisition of Bitcoin, because that keeps the floor of the stock higher. But let me know what you guys think. Do you think that Bitcoin mining stocks are investable? Do you think that these can make you rich? And if you do, which Bitcoin mining stocks are you investing in? Let me know down below. Don't forget to give the video a free thumbs up. I'll see you when I see you. Invest responsibly, do your own research, and as always, crypto on.